What if I told you that while the mainstream media obsesses over tech giants, some of the savviest investors on Wall Street are quietly accumulating shares in a completely different corner of the market? We're talking about companies trading for less than $5, overlooked by most, but poised for jaw-dropping growth. Today, I'm revealing 7 must-buy penny stocks that are not just surviving, but thriving, often backed by strategic shifts or insider confidence. These aren't speculative bets. These are real businesses with massive upside potential, and if you ignore them, you could be missing out on some of the biggest gains of the decade. Let's dive in. Gerdau SA, ticker GGB. Gerdau SA is a major steel producer, operating extensively across North and South America, a market leader quietly shifting its focus to capitalize on favorable conditions. While its Brazilian operations have faced headwinds from excessive steel imports, Gerdau's North American business has been a standout, contributing an impressive 61% to its Q2 '25 EBITDA, a historic high. This robust performance is largely fueled by strong demand in non-residential construction and the protective U.S. Section 232 tariffs on steel imports, effectively shielding domestic producers. The company is strategically allocating significant capital, 1.6 billion Brazilian reais, to expand flat steel capacity in North America, aiming to add 450,000 tons annually. Despite missing some Q2 2025 estimates, Gerdau's net income still surged 14% from Q1, demonstrating resilience. Analysts largely rate GGB a buy, with an average price target implying nearly 27% upside. While dividend stability has been historically unreliable and a reduction is anticipated, the company's strong financial position, evidenced by low leverage and an S&P upgrade, along with ongoing share buyback programs, underscores a compelling long-term value proposition for investors willing to look past short-term volatility. Next, we turn to a key player powering an entire nation, Companhia Energética de Minas Gerais, CEMIG, ticker CIG. Companhia Energética de Minas Gerais is a Brazilian state-controlled electric utility firm embarking on an ambitious clean energy transformation. The company plans to invest a staggering $7.4 billion from 2025 through 2029, leveraging its vast experience in hydropower to expand into cutting-edge clean energy technologies, including pumped storage and advanced energy storage solutions. CEMIG is not just investing in capacity, but also prioritizing grid modernization and digitalization to enhance the consumer experience, aligning with Brazil's broader energy transition goals. The utility recently delivered a strong Q2 2025, beating both EPS and revenue estimates, and showed impressive growth in 2024 with an 8.06% increase in revenue and a 23.47% jump in earnings. Despite this, future earnings projections anticipate a significant 48% decrease next year due to impending regulatory changes that could impact its captive market. However, with its strong return on invested capital and sound debt management, CEMIG fits a growth at a reasonable price profile, presenting a compelling investment for those who believe in Brazil's energy future, even with regulatory headwinds. Our third pick is an IT giant making aggressive moves in the AI space. Wipro Limited, ticker WIT. Wipro Limited is an Indian IT services powerhouse undergoing a profound strategic overhaul, repositioning itself at the forefront of AI, cloud, and digital transformation. Under CEO Srini Pallia, the company restructured its global business lines, effective April 2025, to deliver more integrated AI-powered solutions. Wipro's commitment is evident through its expanded partnership with CrowdStrike, launching the AI-powered Wipro CyberShield SMMDR, designed to simplify and strengthen enterprise security. Furthermore, recent acquisitions like Harman's digital transformation solutions business and the launch of Telco A360 highlight its dedication to enhancing engineering capabilities and leveraging AI for telecom operations. Financially, Wipro reported a 10.9% year-on-year net income growth in Q1 FY26, alongside robust free cash flow generation. While revenue saw a slight sequential decline, operating margins expanded, and total contract value reached an impressive $5 billion, with large deal bookings surging 131% year-on-year. Analysts generally hold a hold rating, anticipating modest upside, but Wipro's aggressive strategic pivot into high-growth tech areas, backed by strong bookings and positions, making it an intriguing play for investors. Moving on, let's explore a major European financial institution with a strong commitment to sustainability. Lloyds Banking Group plc, ticker LYG. Lloyds Banking Group, a cornerstone of the UK financial sector, is demonstrating robust financial health and a forward-looking strategic vision. In the first half of 2025, the bank reported a 5% increase in statutory pre-tax profit and a 6% rise in net income, delivering an impressive 15.5% return on tangible equity. This strong performance is bolstered by a healthy net interest margin and significant contributions from its structural hedge. Lloyds is also firmly committed to shareholder returns, recently increasing its interim dividend by 15% and continuing its share buyback program. Strategically, the bank is undergoing a massive £4 billion digital transformation, leveraging AI-driven initiatives like Athena to revolutionize customer service and drive efficiency. This aggressive modernization includes branch closures and role reductions, but also the creation of new tech-focused positions, aiming for substantial cost savings and non-interest income growth. Furthermore, Lloyds is making significant commitments to social housing, partnering on a £100 million loan for sustainable retrofits, part of its broader £500 million social housing funding target. While litigation risks related to motor finance mis-selling exist, the bank has provisioned for these, and its overall strong capital position and reaffirmed 2025 guidance make LYG a compelling investment. Our fifth pick is another Brazilian financial giant, expanding its reach into vital sectors. Banco Bradesco S.A., ticker BBD. Banco Bradesco, a prominent Brazilian bank, is navigating a dynamic economic landscape with a focus on both financial resilience and strategic expansion. The bank reported robust revenues and profits over the last 12 months, underpinned by a substantial asset base exceeding $2 trillion and significant cash equivalents. Bradesco's market capitalization hovers around $32 billion, with a P/E ratio of 9.4 and a dividend yield of 1.87%. Recent Q1 and Q2 2025 earnings demonstrated strong revenue figures and a healthy pre-tax profit margin, showcasing effective cost management. Strategically, Bradesco is actively expanding its footprint in the healthcare value chain through its investment firm, Atlântica Hospitais e Participações S.A., which recently partnered with Rede d'Or São Luís S.A. to grow the Atlântica D'Or network. This move aligns with its goal to collaborate with established hospital operators, diversifying its investment portfolio. While the bank faces challenges such as high household debt service ratios in Brazil and negative operating cash flow in the trailing 12 months, analyst sentiment has been improving, with recent upgrades to buy ratings. Bradesco's strong capitalization and liquidity position it well to leverage Brazil's projected GDP growth and navigate evolving economic policies. Up next, we have a beverage titan from Latin America with a strong focus on premiumization. Ambev S.A., ticker ABEV. Ambev S.A., Latin America's leading beverage company, is demonstrating impressive resilience and strategic foresight despite some industry softness. While Q2 FY 2025 organic volumes saw a slight dip, the company posted a robust 15% increase in net income and high single-digit EBITDA growth with significant margin expansion. Ambev's balance sheet is formidable, boasting approximately Brazilian real $29 billion in cash, and it continues to reward shareholders with an attractive dividend yield. A key growth driver is its aggressive premiumization strategy, with premium beers now accounting for 22% of total beer volumes in 2025, up from 18% in 2024, significantly boosting gross margins. The company is also expanding into low-calorie and non-alcoholic options, adapting to evolving consumer tastes. Furthermore, Ambev is a leader in ESG, targeting 100% renewable energy in Brazil by 2026 and significant carbon emission reductions. Despite currency risks and input cost inflation, Ambev's dominant market share and strategic focus on premiumization, digital innovation, and sustainability position it strongly for long-term growth in the region. Finally, we look at a telecommunications giant innovating at the forefront of 5G and AI. Nokia Oyj, ticker NOK. Nokia Oyj, the Finnish telecommunications giant, is strategically transforming itself, pushing beyond traditional mobile networks into high-growth areas like data centers, private wireless, and defense. While Q1 2025 saw a slight sales decline and a net loss due to specific one-time factors. Core segments like network infrastructure and cloud and network services showed robust growth. Nokia is aggressively investing in AI and 5G innovation, evident through its new AI RAN center in Dallas, and significant partnerships with industry leaders like T-Mobile US and Deutsche Telekom to advance Open RAN and private 5G deployments. A landmark achievement includes deploying the world's first commercial 1900 MHz 5G radio network for Deutsche Bahn, poised to revolutionize railway communications. Despite a revised operating profit outlook due to currency and tariff impacts, Nokia maintains its strong free cash flow conversion target, and CEO Pekka Lundmark remains optimistic about a slow but steady market recovery. With a proposed dividend and ongoing share buybacks, analysts largely rate Nokia a moderate buy, recognizing its strong fundamentals, strategic diversification, and pivotal role in the future of connectivity. Now, let's look at the raw data. A fascinating picture emerges, highlighting both their unique strengths and strategic positions. For instance, Lloyds Banking Group and Banco Bradesco, both financial powerhouses, show 0% gross margins, which is typical for banks where interest income and net interest margin are the key profitability metrics, not traditional product margins. Yet, Lloyds boasts a massive $74 billion in revenue and an impressive $66 billion market cap, reflecting its sheer scale and market dominance in the UK. Comparatively, Bradesco, while smaller in market cap at $18 billion, still commands a substantial $56 billion in revenue, indicating its powerful presence in Brazil. Now, shifting to profitability, Semig stands out with a strong EPS of 40 cents on a $7 billion revenue base, which is quite robust for a company with a $4 billion market cap, especially when you consider its 17.08% gross margin. This suggests operational efficiency despite facing regulatory headwinds. Ambev, the beverage giant, truly shines with a nearly 48% gross margin, alongside a hefty $17 billion in revenue and an attractive 6.7% dividend yield. For growth investors, Wipro shows potential with a 30.35% gross margin on $11 billion in revenue, alongside a 4.8% dividend yield, proving that even a tech services firm can offer both growth and income. Nokia, a telco infrastructure leader, pulls in $21 billion in revenue with a solid 43.12% gross margin. And finally, Gerdau, the steel producer, with a $12 billion revenue and 12.43% gross margin, reflects the cyclical nature of its industry, but still delivers a respectable 3.6% dividend yield. These numbers aren't just figures, they're strategic positioning, market leadership, and the underlying potential that makes these penny stocks worth a serious look. So, before you go, here's a question. Which of these 7 penny stocks do you believe has the strongest potential to deliver explosive returns in the next 12 to 24 months? Drop your top pick and your reasoning in the comments below. And don't miss our video right here on 15 best semiconductor stocks with massive upside potential. Click on this video here.